kind of just record what the market looks like when the news comes out. Probably started too early. But there is really no telling how it will impact the market. So this is a trade I exited, right? I exited around break even. There is really no telling how it will impact. And this can form a part of the daily roundup for day number. Keep losing track of the days for day number 5. But let's see how let's see in real time how the market actually reacts to the news. Should be out in 2 minutes. So there'll be projections. Let's say I think the projection or what do you call it? What am I? Okay, I'm so tired. The forecast for this period, I think, is 238,000 jobs that they intend to create. Now, depending on whether that forecast is met, the market will react to it. Usually, it has, of course, it impacts. It has impact on employment rates. It has an impact on other macroeconomic variables. I mean, the more jobs you're creating, is likely that the lower the unemployment rate is and stuff. So, since if the news came out, look at the market react to it now. Look at the market react to it now. Look at the market react to the news. I remember this is a trade I exited. It was very volatile. So it might end up going in multiple directions until it actually cools down and goes in one direction. Hence, I don't know why I wasn't paying attention. Hence why I wasn't even consolidating this whole time. The market just consolidated. Remember, the news is the federal rates announcement that would have caused this massive drop. Then it started to consolidate, and it was just waiting on the news from non-farm payroll news. That might have been a notification from my Forex factory. So Forex factory is where I actually go. It's an economic calendar. Pretty much has all the economic news worldwide. You can go on there and see what important news items can come out for that week. Whether it is a Fed meeting to discuss rates, whether it is whether it is the central bank in Europe who's meeting, or the central bank in Japan that's meeting to have discussions around, But yeah, it is. So it's now 7:30. I see the market start to react, right? This is now 30 pips in from where I initially would have entered. I think about it, you can never ever tell how the market can react to news. I can never predict it. So best thing to do, at least what I do, is to stay away from it. There are people who do a lot of crazy stuff like entering orders on both ends of the price. So if the market goes in one direction, it's triggered. If it goes in another, then that is triggered. Yeah, to me, that's gambling. I'm not interested in doing stuff like that. So I just stay to the market when these things are actually happening. I wonder if I can check to see what the actual print was. Let me check to see if I can see what the actual print was. It still says pending. Let me refresh. Alright, so it actually came out lower than expected. Not having a very volatile reaction. Let's see how gold is reacting. And here we go. Look at that reaction on gold. Look at this candle. So you see, sometimes, you remember I was trying to sell it and this was my target. Now, of course, the market eventually went up there, but it would have stopped me out. So gold is having a reaction to it. Now, the numbers, I don't even want to try and rationalize. Well, not very sharp right now to be able to rationalize why gold would react this way. But gold is what you'd call a risk. I think it's called a risk on pair. Or maybe let me see, this is the price of gold going up. It's actually a risk. Yeah, maybe a risk on pair. I'm trying to go in there. But usually, historically, what happens is that when there is economic uncertainty worldwide, people tend to try to put their assets in gold because gold is what you call a safe haven, right? What we're seeing now is gold spot being priced in US, right? So the higher the price is pretty much indication of higher the demand for gold. Now with this news coming out of unemployment numbers coming out lower than expected, people now in a risk off mode. People are less likely to take a risk, and so they try to put their money in more safe asset classes. Again, don't quote me on these things, just me talk top of my head in terms of what I remember or my very limited understanding of it, which is why I see gold pushing up the way it has. Alright. This is why I see gold pushing up the way it has. Let me see what this is doing. Yeah, and this is pushing down. And then this actually has the opposite effect in terms of the price. So this is the price of a... So on the other side, the yen is also a safe haven. The yen is also a safe haven currency, right? The safe haven currency. Now what you're seeing on screen is the price of 1 sterling pound in terms of Japanese yen. When the price is actually falling on this, what it's saying is that it now takes less yen to give you 1 sterling pound, which essentially means that the yen is strengthening. It's strengthening, right? So with that economic news coming out and the price of this falling, to showing that the strength is the yen is actually strengthening against the pound, which also feeds back into my analysis. So the yen. So people are trying to buy the yen, and because trying to buy the yen, demand for it goes up, and it strengthens the yen, or it's an appreciation of the yen, which is why I see it falling. But yeah, that's just a little explanation I want to give. See, massive run up on gold, and I guess I could just segue into just calling it a week. Let me just quickly do the weekly roundup. Let me just do that. So, a weekly roundup, or the daily roundup. So I'd have ended the day down. Right? I'd have ended the day down. Let me see if I can tell. If this will tell me how much I went down by. Nah, not showing me the growth rate. I don't know if you can change it. No. But I would have ended the day down. Right, remember I started yesterday up 67% of the target. Now I'm down 56% of the target. Alright, so I'd have lost $107. But overall, it has been a good week. Overall, can't complain. 55% win rate, which is actually a little higher because what happens is that I'd have entered one of the trades I entered the wrong stop loss, and so I re-entered it. Because it stopped me with 3.5 pips and I re-entered it. So I would have essentially won 10 trades versus 16 actual trades. And I would have lost 6. So my real win rate's around 62.5%. That's unheard of. Right, just to add. It also shows the highest level of market, the trade, the high watermark of the account. So it actually got to 10,600. The lowest watermark is 9,930. So the drawdown I had on there was like $70, and it gives me a projected annual growth return. I'm assuming if I continue trading like this, I can make $40,000 in a year. Who knows? Maybe one day. But yeah, essentially a good week. Can't complain. With Forex, there can't be any surprises, right? I try to set my expectations. I try to be very, very reserve my expectations. Like, I don't expect to have these returns next week. I don't expect that next week I'll be able to make the remaining $400 to close the challenge. I could end up losing everything next week. That's how it works, and those are things I'm trying to fight against, right? I shouldn't be, if I end up losing everything next week, it means that I'll be really, really aggressive and careless, right? And usually there's this euphoria that comes around when you're winning trades behind back of trades, winning trades behind trades. That kind of stuff will happen. What I decided to do this time around, though, is that if I lose a trade, because remember I've been risking $100 on each trade. If I lose a trade, for the subsequent trade, I'm going to reduce my risk to $75. If I lose a trade, if I lose that trade, the next trade going to be $50. So I'm going to continue to reduce my risk until I get another winning trade. That is how I'm going to be going about it. That might work against me, but it also protects me in the sense of not blowing my account. Because usually what I do when I lose trades is I increase the risk, which is actually counterintuitive and crazy, right? I increase the risk because I'm trying to make it back. Losses is a natural part of any trading strategy, right? You can take is a natural part of any strategy, so can't be afraid of losses. Yeah. So this is gonna serve as the daily roundup, as well as this is gonna serve as the daily roundup for today. Doing this one early because I'm not trading for the rest of the day. I am out, done. So until next week, guys.